Hey everyone, welcome back. We're going deep on Uber today.
Uber.
Yeah, Uber.
Yeah.
Specifically, Bill Ackman's recent huge EE investment in them.
Oh yeah, Ackman. That's a big deal.
Yeah, he's not known for making small moves.
Not at all.
Our source is this great article all about it.
Okay.
And it's really interesting stuff. The more I read it, I think I see why Ackman is so excited about this.
Yeah.
It seems like he thinks the market is massively underestimating Uber right now.
Interesting.
Yeah, and it all starts with their CEO, Dara Khosrowshahi.
Okay.
Ackman calls him superb, which is high praise coming from him,
Right.
and says that Khosrowshahi has transformed Uber into a, quote, highly profitable and cash-generative growth machine, unquote.
Well, he certainly he's turned things around from where they were a few years ago, that's for sure.
Yeah, remember back in like 2017, Uber was burning through cash? They had negative EBITDA.
Yeah, it was not a pretty picture.
But by 2024, things were looking very different.
Totally different.
Billions in operating cash flow positive EBITDA. Even positive GAAP profitability.
Wow.
Now, for anyone who's not a financial whiz, EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Right.
It basically measures a company's profitability from its core operations without all the extra financial stuff.
Exactly. So you can see how the actual business is performing.
Yeah, and GAAP profitability means they're making money overall according to like the standard accounting rules.
The generally accepted accounting principles, yes.
Okay, so Uber has gone from losing money to making money.
A true turnaround story.
Yeah, but Ackman's bullishness goes deeper than that.
Okay.
He's really digging into the valuation metrics, and he thinks Uber is trading at a massive discount to its intrinsic value.
So he thinks it's worth more than what the market is currently saying.
Exactly. One metric that he highlights is enterprise value as a multiple of gross bookings.
Right, which is currently sitting at a pretty low point, 9 times.
Yeah. But what does that actually mean for like the average person who doesn't speak finance?
Well, basically it means that if you look at the total value of Uber, like including its stock and debt,
Okay.
and compare that to the total value of all the bookings they make, like for rides, food, delivery, everything.
Yeah.
That ratio is only 0.9 times, which is really low compared to similar companies.
So it's like they're on sale.
In a way, yes. Ackman seems to think that the market isn't fully appreciating Uber's earning potential.
Interesting. He also points to the enterprise value to EBITDA, which is less than 18 times 2025 estimates.
Right, and that also suggests a potential undervaluation.
Especially when you consider that Uber is projected to grow significantly.
They're predicting 18% growth in gross bookings and a 30 to 37% surge in EBITDA just in the first quarter of 2025.
Wow, if those numbers come true, that's some serious growth potential.
Yeah, the kind of growth that makes investors pay attention.
So why should all this matter to like the average listener?
Well, if Ackman is right and Uber really is undervalued, then that could mean some pretty big returns for investors.
Oh, okay, so it's about finding those hidden gems, those companies that the market might be overlooking.
Exactly.
I like it. But Ackman's thesis goes beyond just the financials.
Oh, yeah.
He sees a real fundamental shift happening in Uber's business model. It's not just about ride-sharing anymore.
Right, they've been branching out.
Yeah, Khosrowshahi has been really expanding their reach. They're moving from just getting people from point A to point B to basically moving anything from point A to point B.
So they're becoming more like a general transportation platform.
Exactly. You need groceries, order them on Uber, you need a package delivered. Uber can do that too.
Makes sense.
This diversification is a big part of their growth strategy, and it seems to be working.
Oh, so.
Well, the article mentions that their monthly active platform consumers have grown from 62 million in 2017 to 171 million by the end of 2024.
Wow, that's almost triple the users.
Yeah, and this leads to something called network effects, which is a really interesting concept.
Network effects.
Yeah, could you explain that a little bit?
Sure, so basically it's like a snowball effect. The more customers Uber attracts, the more appealing it becomes for drivers and businesses to join the platform.
Okay.
And then the more drivers and businesses there are, the more options and convenience Uber can offer to its customers.
Ah, so it's like a positive feedback loop that keeps growing and growing.
Exactly. It creates a really powerful growth cycle that makes it hard for competitors to keep up.
But couldn't that kind of network effect end up stifling competition and maybe even innovation in the market?
That's a good point, and it's something that regulators are definitely looking at as these platform businesses become more and more common.
Yeah, it's a tough balance for sure. But in Uber's case, this network effect has helped them become the dominant player in the market, especially compared to their main rival, Lyft.
Lyft, yeah. They've been struggling to keep up.
Even though Lyft actually started with a larger market share, Uber has been steadily gaining ground.
Shows you the power of those network effects.
Yeah, it's like the tortoise and the hare story, except the tortoise is winning.
Uh-huh.
So Ackman sees this dominance over Lyft as another positive sign for Uber's future.
Yeah.
But there's one more piece of this puzzle that's really fascinating.
What's that?
Ackman's take on autonomous vehicles.
Self-driving cars?
Yeah, most people probably see them as a threat to Uber's business model.
Right. If you don't need drivers, what do you need Uber for?
But Ackman and apparently Khosrowshahi see it differently.
Oh, really?
They see autonomous vehicles as an opportunity, not a threat.
Huh. How so?
Well, that's where things get really interesting, and we'll dive into that in the next part of our deep dive.
Ooh, a cliffhanger. I like it.
Yeah, stay tuned because we're about to explore how Uber could actually benefit from the rise of self-driving cars.
Can't wait.
Welcome back. Okay, so that cliffhanger about Uber and self-driving cars
Yeah.
has me really curious to hear more.
Definitely an interesting angle.
But before we get too far ahead of ourselves,
Right.
I think it's important to acknowledge some of the challenges that Uber's facing right now.
Oh, for sure. They're not without their hurdles.
Yeah, like no company operates in a vacuum.
Nope. Even one as big and ambitious as Uber.
Exactly. So what are some of the big ones?
Well, one of the biggest, I think, is regulation.
Ah, yeah, the ever-changing regulatory landscape,
It's a constant battle for companies like Uber.
especially in the ride-sharing and delivery industries.
Governments all over the world are still trying to figure out how to regulate these businesses.
It's a new frontier.
Yeah, and the rules are constantly changing. It's like navigating a maze with moving walls.
Ooh, that's a good analogy.
Right. They have to balance so many different factors.
Like what?
Well, worker rights, for one.
Oh, right, making sure drivers are treated fairly.
Then there are safety concerns,
Yeah.
passenger safety data, privacy.
And of course, making sure there's fair competition in the market.
Right, preventing monopolies and all that.
There's a lot to juggle.
Yeah, and the article definitely highlights this regulatory uncertainty as a key risk factor for investors.
Because one new law or regulation could have a huge impact on Uber's bottom line.
Absolutely, it adds a whole layer of unpredictability.
And on top of that, you've got the whole economic situation to worry about.
Oh yeah, can't forget about the macro stuff.
Inflation, rising interest rates, the possibility of a recession.
All those things can affect consumer spending, which directly impacts a company like Uber.
Right. If people are feeling the pinch, they might cut back on things like ordering takeout or hailing rides.
Exactly. Discretionary spending is often the first to go when times get tough.
So that's where Uber's diversification strategy could really help them.
Yeah, spreading the risk.
By having multiple revenue streams like rides, food delivery, logistics.
They can potentially cushion the blow if one area starts to slow down.
Right, like having a backup plan.
It's always good to have options.
But even with all that diversification, Uber still faces intense competition.
Oh yeah, for sure.
I mean, they might be the big dog in many markets, but there are always new players trying to get a foothold.
You've got companies like Lyft still nipping at their heels.
And then there are all those new hyper-local delivery services popping up.
Some of them are even using autonomous delivery robots.
It's getting crowded out there.
It is. So how does Uber stay ahead of the game?
Right. How do they maintain their edge?
Well, this is where their size and scale really come into play.
Ah, the power of those network effects we were talking about earlier?
Exactly. They have a huge network of drivers and riders, which gives them a big advantage.
They can offer more competitive pricing, faster delivery, times a wider selection of options.
It's hard for smaller companies to compete with that.
It's almost like the bigger they get, the stronger they become.
Yeah, kind of a self-fulfilling prophecy.
But they can't just sit back and relax.
Oh, definitely not.
They have to keep innovating, improving their services, adapting to changing consumer preferences.
If they become complacent, someone else will come along and disrupt them.
It's the nature of the beast.
Right, they have to stay ahead of the curve.
And that brings us back to those autonomous vehicles.
Ah, yes. The self-driving revolution.
Remember that idea of Uber becoming the operating system for the whole autonomous vehicle ecosystem?
I do.
That's where we're headed next. This is a crucial part of understanding Ackman's long-term vision for Uber.
Lead the way.
Let's see what the future holds.
Yeah.
Okay, so autonomous vehicles, self-driving cars, the future of transportation.
The future.
We were talking about how Ackman sees them as an opportunity for Uber, not a threat.
Right. It seems counterintuitive at first.
Yeah, because you'd think that if cars can drive themselves, people wouldn't need Uber anymore.
Right. That's the logical conclusion.
But Ackman and Khosrowshahi, they see a different path.
Okay, I'm all ears.
So imagine this. Instead of Uber trying to build and maintain its own fleet of self-driving cars,
Okay.
which would be a huge undertaking.
Oh, yeah. Super expensive, complicated, all the technology, the infrastructure, the regulations.
It's a logistical nightmare.
For sure.
So instead of doing all that, Uber becomes the platform that connects all the different self-driving car companies with passengers.
So they're like the middleman.
Exactly.
Right.
The hub, the central nervous system of the whole autonomous vehicle ecosystem.
Okay, I'm starting to see the vision here.
You open the Uber app and you've got options. A traditional Uber with a driver, a Waymo self-driving car, a cruise autonomous vehicle, all right there in one place.
So it's like they're aggregating all these different services.
Exactly. Uber becomes the Amazon of transportation.
I like that analogy.
It's brilliant. They leverage their existing strengths, their massive user base, their technology, their brand recognition.
And they become the go-to platform for all things autonomous transportation.
Exactly. They're basically preempting the future, positioning themselves as the gatekeepers of this new era of mobility.
Smart.
But wouldn't it be hard to get all those self-driving car companies to play ball?
Yeah, that's a good question. Why would they want to partner with Uber?
Well, put yourself in their shoes.
Okay.
You've spent years developing this amazing self-driving technology.
But bleeding edge stuff.
But you still need a way to connect those cars with passengers, to manage all the logistics, to handle the payments.
That's true.
And Uber already has all that in place.
Plus a global network of users ready to go.
Exactly. So
Yeah.
it's a win-win.
The self-driving car companies get access to a huge market. And Uber stays relevant, even essential, in a world without human drivers.
It's a pretty genius strategy.
It is, and it fits perfectly with Ackman's overall thesis about Uber being undervalued.
Right. This move into the autonomous vehicle space just adds another layer of potential growth and market dominance.
Makes sense.
I'll admit, when we started this deep dive, I wasn't totally convinced.
Yeah, I was curious to see where this was going.
But after really digging into Ackman's rationale and exploring all the different facets of Uber's business,
Their financial performance, their growth strategy, their plans for the future.
I'm starting to see why he's so bullish.
It's been an eye-opening conversation for sure.
We've covered a lot of ground today.
From questioning Ackman's investment to understanding the forces driving Uber's evolution.
It's a reminder that the business world is constantly changing and that companies need to be adaptable and innovative to survive.
Absolutely. And sometimes the companies that seem most vulnerable to disruption end up being the ones who lead the way.
So what do you think?
Yeah. What's the takeaway for our listeners?
Do you agree with Ackman's assessment?
Do you see Uber as a company poised for long-term success?
We've given you the information, the questions, the evidence to consider.
Now it's up to you to form your own conclusions.
Do your own research, weigh the risks and rewards.
That's what makes investing so interesting.
But remember, the world of business is unpredictable.
Things can change quickly.
So stay curious, stay informed.
And keep those questions coming.
Thanks for joining us for this deep dive on Uber. See you next time.